All right, good morning, everyone. I'm going to kick it off here. Um, okay, U.S. markets last night finally took uh, a nice sell-off off of that sort of 1805, 1808 level that we've been testing on S&P for so many sessions now. You can see there every sector was down outside of consumer staples has managed to have a little bit of a gain on the back of that. I think part of the reason why we had a bit of a correction was due to the fact that we did kind of get a budget deal. It seems like it's something that will probably get passed, but I don't think it's, as good a solution as the market actually wanted. It's not the worst result, but it's not the best result, and so the market's showing a little bit of disappointment there. You also had U.S. Treasuries, which retreated. We saw yields spike back up to about 2.85% on the 10-year in the States, and I think that all of it together just kind of gave us a little bit of a correction on the S&P. Not too hectic, around 1% odd, but I think it's. I think we're going to have to watch it. We're going to have to continue to watch the 10-year going forward. Right now, we've got 34% of economists that are surveyed by Bloomberg that see the Fed actually tapering in December. That's really moved up from a recent poll taken in November that was at 17%. So I think that's very significant. To me, what's going on in the Treasury market right now, they don't actually, the market doesn't expect the Fed to do anything in December, but we'll have to wait and see how it plays out. Asia, we saw a correction as well. We had Nikkei down over 1%. We had the yen that retreated off of some of its lower levels. We also had the Australian market that was at one point, I believe, down closer to 1.4%, bounced up to only down 0.8% to finish the day. I think that obviously just kind of following on the coattails of the U.S. equity market. So, like I said, we'll have to see how it plays out. What's really interesting to me at the moment is the way that commodities are trading. Physical commodities are trading incredibly well. If you measure in the past week and a half, this is a period where we've had great data out of the U.S. And markets, behaving rather well. We've had across the board commodity prices rallying. Oil that's moved up from around 91.5 all the way up to 98.5. Today it's back down to 97.5. But we had copper that's rallied, almost 15 cents. Gold that's even rallied. So I think this is another. We're starting to see some correlations. Again, we're starting to see some moves that seem to be a little bit more aligned in terms of sectors and things like that, which is interesting. And I think we're just going to have to watch it going forward. We'll keep you up to date on what we think's happening with all of those moves going forward. All right, we've got French CPI out this morning. We've got Italian CPI as well. We've also got local PPI at 11:30. We've got industrial production out of the Eurozone. That might be worth keeping an eye on. We've got retail sales advance in the States, and then we've got initial jobless claims, which will obviously be the focus of the day today at 2:30 in the U.S. All right, let's jump into the maps. Okay, first thing I wanted to have a look at this morning is Anglos. I want to actually look at it on a 30-minute. The reason why I want to show it is, obviously we're going to drop this level this morning to start off, but you can see how big of a level this 220 has been. We did get below it for one day, kind of came back up and closed right at it. After we tried to break down below, and you can see we've really been in a very, very consistent range between 220 and 230, pretty much going all the way back until for a month, going all the way back to about the 18th of the month. We've been right in that range. So this is definitely proven to be a significant level here at 220. I think we are going to drop it this morning. If we do drop and hold, I would expect us to maybe even come down and test 210. Excuse me. strictly because of the height of this channel. I think that's what we'd be due to see as a correction. But watch it closely. If we can get back above 220, I think it's an incredible win. These things, along with Billiton's, Glencore, Rio, they all traded really well into the end of the day yesterday until the U.S. markets opened, and then obviously got hit a little bit. So we'll see if they can continue trading a little bit better today. All right. Naspers, I wanted to just have a quick look at. We'll look at it on the year chart here. What I wanted to show out of Naspers is really the sort of 980 level to 900 level, which to me was a pretty clearly defined range for us. We stayed in that range for a good part of 3 months, and we broke out to the upside there. We're talking about an 80 rand range. We're looking for $80 on the upside. We got exactly to that number yesterday, which was 1060. So the breakout from 980 took us to 1060 intraday. We pulled back off those levels, but the bottom line is I just wanted to show that the target, I think, here has been reached. So keep an eye on it. I think that I think it may struggle to get above that in the near term, obviously a test back at 980 would probably be a decent little buying opportunity. All right, we're going to look at SAB, which is a chart we looked at 55 times over the past, however long. But you can see here, we just held this 520 level so many times. The breakout was just so definitive in terms of the actual resistance levels. Once we broke out, we held this trend line probably literally 10 to 12 times over the past month and a half. We finally actually dropped it on a closing basis. We did drop it on a closing basis going back in November one day, but we didn't get that far below it. Yesterday we actually closed at 13.99. Right now, to me, this looks like we could actually fail it a little bit. I would expect, at least a test down to sort of 500 to 510, somewhere in there, maybe even to the 200-day moving average. But we've definitely failed that level, so watch for this thing to potentially correct a little bit further. All right, True Earths, I wanted to actually have a look at a 5-year chart, and the reason why I wanted to look at it like that was so that we could look at how important this level is here at the 75, 76. You can see here, let me just take it down just a touch. Going all the way back into 2011, you can see how many times we touched at this 76 level. I know that's trust me, that's 76. I was looking at it after I shortened it up a little bit this morning. In fact, let me just shorten it up here so we can see it a little bit better. Look at how many times we touched 76 on the top side before we finally broke out, and then we kind of base built around it and pushed higher. We came down and touched that same level all the way back in June, July, and now we're coming down to test it again. It looks like I don't see any way we don't test the 76 level here. And maybe I would say 75 is kind of last resort here with the wick that we're looking at. But this is a big level in True Earths. I mean, if we drop below this, I mean, the bottom could really fall out. But for you guys that are looking to do some bottom picking, this might not be a bad one, a bad place to look at nibbling on True Earths. Okay, we'll look at MediClinic. Sorry, how's it doing that? There we go. Look at MediClinic here real quick. Just a bit of a test of resistance that we're having here, a bit of a fight for the last couple weeks. You can see that obviously there's some significance to the 73.30 level. And we just seem to bump our head against it, kind of every other day over the past 3 weeks. If we can get above 73.30, wouldn't be surprised to see these things take out recent highs. The pullbacks and all of these, anything to do with healthcare or pharmaceutical and locally here have just been invincible for a while now. So keep an eye on that one. Mr. Price making a beautiful ascending triangle here. Coming into this, 58 level, and I think the setup is definitely still a bullish setup. I know guys, are kind of looking to, sell this thing because it's so overextended, and a lot of the other retailers are under pressure. But we've got to go with the market action here. This thing's definitely outperforming on a daily basis. If we get above 158. I easily think it's got 6-7 rand to the upside. So just keep an eye on it. If we get above 158, I think it can go. And the last one I'm going to show is EasyJets out of London, making a nice little breakout as of yesterday. Nice looking chart. I like the way the setup is. We consolidated a little bit under resistance, kind of started to pull back and then just ripped through yesterday. I think the target here is also quite clearly defined, which is great. I don't know what the heck just happened to my chart, which is great. You can see there we've got about potentially a 2 rand 50 move to the upside. £2.50 move to the upside here. So nice looking chart and EasyJets. I like the setup here. Could move higher. Thanks a lot, guys.